I think traditionally our area of business has been dominated by, family investments. Most of the insurance companies are either owned by some family holding investment, and for that reason, I think we've not been able to create critical mass. But lately, we've seen a lot of interest in multinationals investing in the insurance business. So that is going to bring necessary scale in terms of investing, plowing capital in market development for the insurance business. Like we said elsewhere, insurance companies own the banks in developed jurisdictions, and the influx from the big brands, Old Mutual, the Sunlums, it's a pity AIG seems to be pulling out. But we expect that influx from the big brands to bring necessary investment in the infrastructure and scale, necessary critical mass for developing the insurance business. More so the life side, because that's where the potential is. But having said that, the industry will need to really invest in trust. The public need to trust insurance as a business like they do trust banks. And that's why we really have to invest in a little bit of market campaign, especially with the youth, to get them grow knowing that insurance is an investment and a protection at the same time. More so as an investment, because life business is really protecting the future. So it's an investment, it's a security against your future, and that's where we need to invest more capital in. Bottom of the pyramid, very critical, and SME sector, very critical. There's a lot of pressure on expense on insurance for the corporates, naturally so, because big businesses and they will be struggling to maintain costs at some certain level, and big businesses have more diverse options of risk management. They could self-insure possibly, they could contain the risk. So there are more channels of risk management for the big corporates. But for the retail and SME, the immediate protection is insurance. So we really need to rethink our product offering for the retail and SME market. And for that, we need to generate products which respond spontaneously, and more so using technology. But having said that, we have to invest in trust of insurance as a way of protection. And that will only come if we have responsive products. Cut down the small print, make sure we have very elaborate wording in insurance. 5 words should be enough for an insurance contract. Yeah. So that is the way to go. Unless we think that way, it's going to always be a maze, because the common mwananchi in the streets will never understand what insurance or bima is until they can feel it, they can touch it.
And it actually does help them.
Yeah, it does help them. People in Kikomba, they need to appreciate what insurance can do, and they need to see it happening. Okay, like we said, I think there was complacency. The insurance market was comfortable, good returns on investment income, less to struggle for, healthier bottom lines. But now we have a wake-up call. So I think it is just the right time that we have to think differently. We are also pushed by technology. We were limited in technology years back. And for us to have simple policies, easier distribution channels, it was very difficult to do on pen and paper. But now with technology, I guess it's going to be very easy, really to deploy microinsurance and more responsive policies. So yes, I think we've not played catch up with technology, but the future looks very bright going forward. And as we speak, most of the insurance players I've come up with a small look-alike of what I would call a simplistic insurance contract. And they are more responsive. And the innovation labs across the sector are busy looking for ways to respond to that. So I think it's going to be okay. Yes. A good one. I mean, if implemented as planned, risk-based capital is very modern. It is the way to go. Um, it, it, I mean, you don't supervise by setting up laws. You supervise by getting a self-regulatory environment. And risk-based capital is basically driving your scale of business based on what you have invested in. So it is the best way to go. We do expect scale now. We do expect investors to put more capital, and more capital means more scale, means that you now have put enough capital to drive the business, to drive what we are talking about, innovation, to invest in skill. So it is a way to go, and I think we must give it to the regulator for pushing that through. Of course, any new law comes in with a lot of resistance, but IRA, I mean, let's give them credit. They've tried to babysit the industry to the level that at least by the time they strike the whip, everybody is in a position to respond positively. Otherwise, if they just put it down quickly that, look, in 6 months you must comply with the risk-based capital, most of them would have fallen off. It will have created insecurity in the business, more turmoil with most of the companies collapsing because they could not have, they were not anywhere near the minimum capital requirements on a risk-based basis. So I think the regulator has been really very focused on making sure that risk capital works. And it's the way to go. It is actually basically self-regulation.
Yes.
You sit back as a board and you can tell very quickly whether you are compliant or not. The regulator doesn't have to come and inspect your books. You report yourself. Yeah, the motivation to divert capital in any business, in any financial business, I mean, it's not only in Kenya or in Africa, it's all over the world. We see big multinational financial institutions collapsing because of corporate governance. And it is basically stems on how you regulate them. Because now with the risk-based capital, I mean, any CEO will be able to assess every single day. You know whether you are above the water or you are sinking. So I think it is the right thing to do, and I hope that can be, replicated in all the other sectors of the economy. Yeah. Trust, 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 trust. The insurance, the word broker by itself is not a very good English word.
Yes.
We need to look for another one, and that's why at Liason we don't call ourselves brokers. We call ourselves consultants.
Yes.
In places like Tanzania, a broker is called dalali. They are given all sorts of names all over the world. I guess it stems from possibly auctioneers and court brokers.
Yes,
people
yes.
who tend to hand money where they have not put their sweat. So trust is key. So at Liason, we've invested in the brand, we've invested in the skill, we've invested in scale as to showcase competence in consulting. So trust is key. But there's also a big challenge where the insurance companies tend to compete with brokers. They also fail to trust the brokers, so they want to snip through and see the clients behind your back. Tenders come where the insurance companies want to influence that it can be tendered directly without using the brokers. But over time, I think the broking business is going to take traction because clients want to be advised more diversely, especially now that we are talking about risk-based
Yes.
supervision. The client needs to know whether they're insuring the company which is capable of responding to claims when they come. So the broking business is going to blossom for those who invest in skill. Yes. We will see consolidations, maybe sellouts, maybe some of the smaller companies will be sold out to big multinationals. Consolidation in the insurance industries will always be a challenge. Because it's not always that 1 + 1 equals to 2. So I really don't think consolidation is going to be the immediate solution. I think what we will see certainly is fallouts and new investors coming in the market space. Yeah. Maybe wind downs. I would rather it is a wind down than a collapse. Exactly. I am happy to see a wind down than a collapse. A collapse will be negative, and a collapse will be really not good for the insurance industry at all. Yeah, I mean, for the space we have, playing at 42 for short term, and then possibly another 30 for the short term, because now there is a regulatory requirement that you split the two businesses. It's too big. We are, I mean, over-insured, in my view, in terms of numbers. We possibly would need about 7 big companies competing in this space. I mean, the whole gross revenues in the industry is like $1.8 billion. Very, very small. I mean, if you look at the size of Safaricom, if we may use them as an example. So I mean, we are over-established. But it's just a matter of time. There will be, like you have said, just a few big dominant brands. Hey, for us, I mean, that's our vision. We are looking at Africa spread. We've looked at Africa and zoned Africa into 5 key areas. Currently we are in the whole of Eastern Africa region. We operate in Kenya, Tanzania, Uganda, Rwanda. Incidentally, we are innovating in South Sudan, even in the difficult circumstances. We are looking at West Africa. We shall have an operation in Côte d'Ivoire soon. In the northern region, we shall have an operation in Marrakech very, very soon. And in the southern region, we have already earmarked to have an office in Joburg. And in the Central Africa region, we shall have an office in Kinshasa. So actually our vision is we need to benefit from the Africa Rising narrative. And we are very focused on that in our strategic plan. So by 2020, by the time we go to election 2022, Liason will be an African multinational.